Welcome back. What a wild housing market we have right now. Asking prices have been relatively flat on a national level. And on top of that, we're seeing inventory increasing by more than 30%, but also we're seeing more price reductions. And on top of that, houses are taking longer to sell as well. This is based on my own analysis of Realtor.com's latest report, which was just posted on July 25th. And just like my previous videos, I did not even read this, but I'll provide a link in the video description below in case you guys want to read it. Instead, go to realtor.com/research/data, click on weekly inventory, and their data, by the way, goes back through, I believe it's 2017. Click on that link right there and it takes you more or less to this information. So we're going to talk about asking prices, inventory levels, new listings, days in the market, how fast or how slow houses are taking to sell, and also the number of price reductions and the share price drops as well. So let's first talk about asking prices because this has kind of been a new trend over the past couple of months now, because the growth rate of asking prices has been relatively flat ever since February. These figures, by the way, is the percent changes compared to the same time frame 1 year ago. So for example, last week, which was the week ended July 20th, asking prices, these are people listing a house for sale, their asking prices, the growth rate on that is flat year over year. It has been flat ever since February. This, in my opinion, is due to rising inventory levels, record high home prices, and 7% mortgage rates. In other words, it's a challenging endeavor to buy a house right now, especially if you're looking to buy a more affordable property. So because of all this has been limiting home sales, causing inventory to increase, and also houses are taking longer to sell as well. This should limit home price growth of closed home sales in the near term. All right, that's asking prices. Let's talk about inventory levels, or the amount of houses for sale. We're only talking about existing houses, excluding brand new houses, and of course, excluding multifamily properties as well. So inventory levels increased by 36.9% year over year. There's been more houses for sale this year compared to last year for the past 37 consecutive weeks. In other words, inventory has been increasing compared to the previous 12-month period ever since mid-November last year. This, of course, is good news for home buyers, giving you more options to choose from, which of course limits home price growth further as well. One thing to note though is that the year-over-year growth rate of inventory has been more or less stagnant for about 2 months now, pegged at around a gain of 35 to 38% year over year. You can see that right here. Ever since the middle of May through more or less the end of July, inventory has been increasing in the range of 35 to about 38%. In other words, we have a lot more houses for sale compared to last year, but the growth rate has been basically paid at the same rate at this time last year. So my take on this is likely from only single-digit gains of new supply hitting the market. In other words, new listings. New listings rising compared to the previous 12-month period by less than 10%. This is much different compared to the previous periods because before that, new listings were rising by double digits. I'll share that with you guys here in a little bit. Let's first talk about inventory levels according to altosresearch.com. So for the week ended July 21st last year, there was just over 480,000 existing houses for sale. As of July 19th this year, that increased to 668,000. This means we have approximately 188,000 more homes for sale right now compared to 12 months ago. That's a 39% increase. Something I noticed as well is that this increase in the range of 38 to 39% has been paid at that amount for about a month now, over a month in fact. So in other words, over the past 1 month, the growth rate of inventory compared to the previous 12 months has been paid at around 38 to 39%. In other words, the growth rate has been moving more or less in line with 2023. But wait, there's more, because there's approximately 169,000 more homes for sale compared to the start of this year. So year to date, we're up by about 34%. That's basically the middle of July compared to January this year, up by 34%. During that same time frame, inventory increased by only 2% last year. So in other words, supply is growing much faster this year compared to 2023. Not only is inventory growing faster than 2023, but also it's growing faster than the average looking at pre-COVID levels. So for example, inventory increased on average by 13% from January through June in 2017 through 2019. However, though, the increase so far this year, again up by about 26% year to date, is about half that during the same time frame of 2022. At that time, we were up by about 52% from January through June. This year, up by 26% during the same time frame. This, my friends, is why I do not expect to see a similar sharp pullback in home prices like we saw in 2022. Let's keep an eye on this in the coming months, though, of course. To summarize, inventory is not only up by 39% year over year, but it's also rising faster looking at pre-COVID levels, 2017 through 2019. However, the rate of increase is only half that compared to 2022. And I should say so far this year, of course, right? Also, we have approximately 30% fewer houses for sale right now compared to the same time frame in 2019. That gap between this year and 2019, though, has been getting more narrow. I think a couple months ago, that gap was around 40%. Now we're down to about 30%. From 2019. All right, let's have a look at new listings because that increased by only 6.4% year over year. So new listings have completely lost momentum ever since the beginning of May, rising by only single digits except for the week of July 4th. Back then, new listings decreased by 4.9%. A lot of people decided to not list their home during the holiday week. And the week prior to that, we saw a gain of 10.8%. So besides those 2 weeks, we saw single-digit increases of new listings for about 2 months. This, in my opinion, is one of the reasons why inventory is not skyrocketing. In fact, it's been relatively stagnant for about 2 months now. If you guys want to see home prices fall greatly, watch inventory levels. All right, let's change gears slightly here and talk about how fast or how slow houses are selling right now. This is a big change over the past several weeks, because homes took about 4 days longer to sell on average last week compared to 1 year ago. Homes have been spending more time in the market for the past 11 consecutive weeks. This is much different compared to October of 2023 through March this year, when houses were selling faster compared to 12 months ago. Also, looking at the number of price drops, that increased by 46.4% year over year. On top of that, the number of price drops has been higher compared to the previous 12-month period for the past 26 consecutive weeks. So basically half a year in which we're seeing more price reductions compared to last year. If you're a home buyer, it's great to see more inventory levels. It's great to see that houses are taking longer to sell. And also, it's also great to see that price drops are also increasing. But for comparison's sake, price reductions were up by triple digits in late 2022 through early 2023. All right, I have a summary for you guys because, of course, that was a lot of information to digest. Number one, the growth rate of asking prices has been relatively flat ever since February. This is from a significant increase in the number of houses for sale or housing inventory, as well as elevated mortgage rates and, of course, home prices as well, which is causing sales to remain low. Number two, housing inventory increased by 37% year over year last week, but the growth rate has been stagnant for the past 2 months, pegged at around 34 to about 38%. In my opinion, this is from single-digit gains of new listings. However, there's still approximately 30% fewer houses for sale compared to 2019. Of course, real estate is local. So as of June in Texas, they have approximately 5% more existing houses for sale this June compared to June of 2019. Idaho has 4% more homes for sale, and Florida saw a gain of 0.4%. Also, Tennessee, Arizona, Washington State, and Colorado are not too far off behind as well, only down by single digits compared to June of 2019. Number three, 78% of homeowners who do have a loan on their house have a loan below, or I should say they have an interest rate below 5%. That's based on data from Freddie Mac. That has been limiting the amount of people who are listing their house for sale, thus keeping inventory levels well below 2019's levels. New listings have been only increasing by less than 10% since May, which has been limiting the rise of inventory. In my opinion, I do not expect to see a surge or a huge surge of new supply hitting the market or new listings unless unemployment spikes. In other words, I don't expect to see new listings surging unless we see people forced to sell their houses. Number 4, the share price reductions is at least a 5-year high during the same time frame and has been rising faster than 2023, but slower than 2022. A friendly reminder, the share of price drops is seasonal though. It tends to peak in the winter months, and here we are in the end of July, and we're still at very elevated levels. Number 5, last week, houses took about 4 days longer to sell. And on average, it's been taking longer to sell a house compared to the previous 12-month period for the past 11 consecutive weeks. But wait, there's more. Number 1, mortgage rates are down from last year's peak back in October last year when the average rate was around 8%. But housing affordability is still a huge issue right now due to record high home prices and of course still elevated rates. Number 2, the most recent stats showing mortgage purchase applications, which of course is a leading indication of home buying demand, that fell by 15% year over year. That was for the week ended July 19th from the MBA. It has been down year over year by double digits for quite some time, by the way. Also, the National Association of Realtors, or NAR, reported that pending home sales for existing houses in May fell by 7% year over year. We should have June's numbers in about a month. So May's numbers down 7% compared to May of 2023. And that, by the way, decreased to an all-time record low, and their data goes way back until 2001. In other words, their index, which is a measure of contracts being signed, is at a 23-year low. In addition, new home construction sales, a measure of contracts being signed between builders and home buyers, so it's really more acting like a pending home sale than anything else. That decreased by 7% year over year in June to a 7-month low. That's based on a video I posted a couple of days ago. So have a look at that because this is staggering that sales still fell by 7% year over year, despite the fact that they have more new houses for sale nationwide compared to or going back to 2008. So a glut of supply, yet sales still decrease. Number 3, looking forward for the nation as a whole, asking prices of houses for sale are flat, inventories up greatly, homes are taking longer to sell, and we're seeing a rise in price drops compared to last year. We're moving towards, I put that in caps because we're moving towards this. We are not in a buyer's market, but we're actually moving towards that direction, which is great. So we're moving towards a buyer's market. But of course, it could look a lot different. Imagine a scenario in which mortgage rates were absolutely skyrocketing, over 8%. And of course, if inventory was absolutely skyrocketing as well, that'd be a recipe for disaster, of course. Plus, every housing market's different. Inventory in California, where I live, of course, and of course, the northeast part of the US is down greatly compared to 2019. Whereas inventory is piling up in Texas, Idaho, and Florida. And number 4, the most important one, I appreciate you guys so much for watching today's video. Please like and subscribe. Have an amazing day, and we'll see you in the next video.